Today, we embark on a comprehensive journey into the world of Stanley Druckenmiller, one of the market's most stable, disciplined, and mysterious geniuses, delving deep into his mind and the unshakable strategic fortress that has allowed him to close over 30 years without a single losing year. Today, you won't just hear a success story. You will learn in the finest detail how one of the greatest traders in financial history synthesized price, liquidity, and human psychology into a flawless game plan. What places Stanley Druckenmiller in a league of his own in the modern financial world is his unwavering yet rational approach to technical analysis. For most investors, technical analysis is a lifeline, a form of fortune-telling, or merely a collection of colorful indicators on a screen. However, for Druckenmiller, technical analysis is not a belief, but strictly a tool for validation and timing. He never views technical analysis as a magic box that operates in isolation or answers every question. He lives by a legendary principle that has gone down in history. I never use valuations to time the market. I use liquidity and technical analysis data for timing. This sentence essentially eliminates the greatest mistake in the trading world, the error of losing money while trying to be right. While macroeconomic data and fundamental analysis tell him what to buy, charts and price action tell him when to pull the trigger. In Druckenmiller's universe, technical analysis is a massive mental filter rather than a simple signal engine. To understand how this filter works, we must look closer at his concept of tape reading. In modern times, we call this price action, but for Druckenmiller, the concept is much deeper. In his analysis room, there is no place for piles of complex indicators or intricate oscillators covering the screen. To him, price is the most honest and purest source of data. Price does not lie. Price does not make excuses. In the macro world, everyone has access to the same data. Inflation figures, Fed interest rate decisions, and employment data hit everyone's screens daily. However, when everyone has the same information, the difference is made by how the market reacts to that information. If the market struggles to rise despite positive news, or if the price doesn't fall when macro data is apocalyptic, the ultimate truth for Druckenmiller is the price. He does not chase lagging indicators like RSI, MACD, or moving average crossovers. His focus is on the quality of the trend, the direction of momentum, and critical price breakouts. Specifically, the harmony between multiple time frames, such as a primary trend on a weekly chart being supported by a momentum breakout on a daily chart, is his strongest confirmation mechanism. When he captures this alignment, he knows the mathematical probability of the trade's success increases. Druckenmiller's harshest and perhaps most difficult principle to implement is the "don't argue with the tape" rule. This is a total ego control mechanism. An economist or a strategist can spend hours explaining that an asset's valuation is too expensive and that these prices are irrational. But for Druckenmiller, price is the final result of the market's collective intelligence. If a liquidity-backed trend is upward and the price is consistently making higher highs, standing against this flow is, in his view, a sign of intellectual arrogance. The market does not reward those trying to be right. It rewards those who follow the money. He looks at what the market is doing, not what it should be doing. This perspective is what kept him alive even during the 1987 crash. When the market began to collapse, he bowed to the price and changed direction in seconds, regardless of his macro thesis. Here, we must mention another vital function of technical analysis: risk management and position sizing. For Druckenmiller, a technical level is not just an entry point, it is also the level where he declares to the world that he is wrong. A stop-loss point is not just a number, it is the point where the macro story behind the trade is technically invalidated. If the price turns against the established technical boundaries, no matter how logical the fundamental thesis seems, that idea is wrong for that moment, and the position is immediately abandoned. The technical level is where the ego dies. This discipline is the main element that allowed him to manage massive capital for 30 years without taking major wounds at the table. To him, trading is not a war of being right, it is an art of survival and capital growth. The real difference that makes Druckenmiller truly legendary lies in his ability for asymmetric thinking, which he builds upon technical analysis as a foundation. He doesn't look at trades as just charts, he approaches every trade as a balance of probability and risk-reward. The questions he asks before entering a position are clear: how much do I lose if I'm wrong, and how much can I gain if I'm right? If the probability of loss is 1 unit and the potential gain is 5 or 10 units, that is when Druckenmiller makes his famous big bets. This is the most critical lesson he learned during his years at the Quantum Fund, working with George Soros. When you find a truly rare opportunity where the risk-reward balance is overwhelmingly in your favor, playing small is not just a mistake, it is a financial sin. Recall the legendary British pound trade in 1992. He saw a structural contradiction, and macro and technical data confirmed each other. When Soros asked him, "How big is your position?" and Druckenmiller replied that he had invested all his capital, Soros responded, "If we are this certain, why aren't we doing more? Why aren't we pressing it with leverage?" This is the pinnacle of asymmetric risk management. However, behind these big bets lies a massive patience and liquidity reading skill that most traders do not possess. Druckenmiller is not someone who trades every day, constantly seeking excitement in front of the screen. He waits for the right moment like a hunter. As Jesse Livermore said, "The big money is not made by constant movement, but by knowing how to sit tight in the right position." Druckenmiller knows very well that the primary fuel for markets is not corporate earnings, but liquidity. Money supply, credit expansion, and the actions of central banks are the true architects of bull and bear markets. Technical analysis is the most honest mirror showing how this liquidity flow is reflected in market charts. If the price is not rising while liquidity is present, it is a sign of a major trend reversal. If liquidity is tightening but the price is still going up artificially, it is the silence before the storm. One of the most striking lessons in Druckenmiller's career occurred during the tech bubble of 1999 to 2000. After years of immense success, when he realized the market structure had changed and moved outside his area of expertise, he showed the courage to stop while at the top. This is not just technical knowledge, it is entirely a matter of character, self-awareness, and discipline. Very few people in the financial world can stop and walk away from the table when their advantage ends. He does not stick to a single style. He blends macro with technicals and liquidity with trends as the situation demands. His success is based on a dynamic mindset, not a static model. When the market changes, he changes. He never falls in love with an idea. The period of forced maturation at the beginning of his career taught him to trust his intuitions and price movements. Taking on great responsibilities before his analytical muscles were fully developed forced him to learn the language of price to survive. This forced education developed his greatest future weapon, mental flexibility. Druckenmiller shows us that a trader's greatest enemy is not the market, but their own fixed ideas. He sees technical levels not as dogmas, but as breaking points of market psychology. When a support level breaks, he reads it not just as a line being crossed, but as the end of the hopes and stories of thousands of investors. In closing, let us remember the greatest legacy Stanley Druckenmiller left us. Technical analysis is not a fortune-telling tool. It is a professional compass used to ride the trend, adjust timing, and, most importantly, control risk. Success comes not just from memorizing indicators, but from reading the market as a whole, alongside liquidity, macroeconomic realities, and the raw movement of price. Knowing when to play big with courage when you know your advantage, and knowing how to set aside the ego and exit with small losses when you realize you are wrong. This is the most valuable lesson to be learned from this most disciplined giant of modern markets. He is not just a fund manager. He is a system of thought that teaches how to look at markets. When you integrate this discipline into your life and trading plan, markets will no longer be chaos, but a meaningful narrative. Remember, being right in the market doesn't win you a medal. Only being in the right direction at the right time makes you money. Druckenmiller's 30-year journey is the most brilliant proof of this truth in financial history.
Thank you for watching our video. In the next episode, we will examine the journey of another legendary trader. Don't forget to subscribe and turn on notifications. For more content and strategies, you can join our Telegram channel. The link is in the description.